Let's call this what it is, a dramatic reversal in the final hour of trading. After being up more than 440 points early in the day, the Dow sliding again, off nearly, 200 points. What caused the final hour fizzle? Welcome, everyone. I'm Stuart Varney in for Neil Cavuto. This is Your World. The Dow having real trouble bouncing back from yesterday's 588-point plunge. To Gary Kaltbaum on what just went down. 200 points lower at the closing bell. What happened, Gary?
Well, first off, simplicity. We started a good bear market in the last few weeks, and it's gaining teeth. And I think basically today is the definition of a bear market when you're up 450 and finished down. I'm amazed. We dropped 200 points in the last few minutes. That is the big money selling. And I'm just of the big belief global growth has come to a standstill, and I'm pretty sure we're going to see a lot of recessions around the globe, and that's going to start coming out in the news real soon.
Now, for non-professionals, when you use the expression a bear market, what you're talking about is a much longer-term decline for stocks, correct?
Yes, yes. Look, there's a definition of a bear market that has to be 20%. For me, it's just we know the market's going down. And when you see what you've seen over the last few days, and I know a lot of people are hopeful that things are going to turn around and just turn back up, it typically just does not work that way. And today is really, for me, it's just a smack in the head about what the market thinks and what the big money's doing. And I'm amazed they could not keep this market up for one day, and then they shellacked it by the close.
Now, I'm not going to ask you to forecast what happens tomorrow morning, but clearly it's a high anxiety time. There'll be a great deal of anxiety right before the market opens at 9:30 Eastern tomorrow morning, right?
I would think so. And Stuart, I've told you this, and I've said this many times. The biggest issue with the markets when they turn down, when there is so much leverage in the system, that leverage really enhances the drop. And margin in the markets was the most in history coming into this drop, as well as leverage in derivatives and things like that. And that's really my big worry. And I think that's what you're seeing here, a consistent selling off of that margin, as well as selling off of equities. And I think it does tend to feed on itself. Remember, fear and greed are emotions that are very close to each other, and at 10 a.m. you can be very greedy because, the market's up 400. By the close, you're taking Maylock. So I think that's what happened today, and I think there may be more to come real soon.
Now, early in the day, the Congressional Budget Office, that's the government's own bean counters, said that we'll only get 2% growth this year, not 2.9% growth. Now, that's a big drop in the growth forecast. Does that have something to do with this decline?
Yes. But I think you're going to see one, and I think you may see in the coming quarters, and I think the market's the best telegrapher of it. I think you're going to see some negative quarters coming up. You can blame it on China, blame it on Europe. I just deal in reality.
Wait
and the
a
worry
minute, Gary.
is this is all
negative quarters. Yeah. Are you saying recession?
Yes. Yes, I'm saying the U.S., this market is forecasting a recession here and across the globe, and I think I think that was the start today from the CBO, and I think in the weeks to come, and you can mark this down, I'm saying this, you're going to see them starting to come down to 1.5, then 1, and I think you'll see some negative numbers as we go into the end of the year.
But hold on a second, Gary. What tools do we have to fix the slide in the economy? What can we do about it?
Again, one of my biggest worries is how much ammunition do we have left? We've had 0% interest rates for 7 years. Around the globe, they have printed somewhere between $15 and $20 trillion. The only thing really left is Janet Yellen decides to just turn tail and start printing money again. And I'm pretty sure that's not out of the question, especially if the numbers really start to come south. So QE4, more printing of money, I'm not sure that does the trick. Remember, another big problem is the world is debt-laden, and debt is not good, especially when you have a ton of debt. And I think the cows are coming home to roost right now. And look, I hope I'm wrong, but the markets are saying something else right now.
Gary Kaltbaum, thanks so much for joining us on a very big day. To Ashley Webster at the New York Stock Exchange, what on earth took the wind out of the sails of the market? We'll get to that report shortly. Obviously, the CBO forecast of only 2% growth, that had something to do with it. Now, the drop in the market prompted this response from GOP presidential candidate Scott Walker. He said, the president should cancel a state visit from China's president to the White House. Cancel it. Walker cites China's continued manipulation of its markets, cyber attacks against the U.S. blamed on China, as well as its military buildup in the South China Sea. Mercedes Schlapp thinks the president should cancel the visit. Craig Smith does not. Mercedes, to you first. You cancel a state visit. That is a huge insult to China. It's very harsh. You really want to do that?
What's a worse insult is the fact that China continues to manipulate its currency. It continues to have these Chinese hackers that are costing millions, if not billions of dollars for American companies. And the fact that we're dealing with a situation right now where the U.S., has to be much more aggressive in dealing with the Chinese government.
Okay, Craig, you think that the visit should take place. Make your case.
Well, absolutely. Stuart, first off, this was planned back in February. And quite frankly, it's just rude to cancel on a world leader, for Pete's sakes. I mean, it shows a lack of manners. But more importantly, the meeting was supposed to be about climate change, which I think is a bunch of baloney, but also the Iranian nuclear deal. Now, if we want to all of a sudden follow the bouncing Trump, because Trump the other day attacked China because of our financial woes, then I guess we'll all take this position. But if you're a free market economist and you believe in the free markets, China is merely trying to do what's best for their economy. I agree with Mercedes that we should stop the hacking and the stealing of intellectual properties. But this is what gives our president the chance to sit down with President Xi and talk to him about these issues. Now, whether he will or not is another thing, but that's what you do. It's called diplomacy.
Do you think President Obama would get tough with China's leader?
Actually, I don't. But that doesn't mean you cancel a meeting. I mean, we say we have a weak president, so therefore we're canceling the meeting. You've got to keep the communications open, Stuart. And look, I was with Neil 2 weeks ago when the Chinese dropped their currency 3.5%. We didn't see the market come apart right away, Stuart. You remember. And then it was the end of the week, it started getting weak. Last week we lost 1,000 points. Yesterday we lost 580. Today we lost, I didn't see the final tick, 300-400 points, or whatever it was. I mean, this has nothing to do with Chinese. Look, we're in a global slowdown. America's in a slowdown. Look at corporate profits that are being forecast for the next quarter, Stuart. They're going to go negative.
Right.
Okay, Craig.
Gary has this right. We're in a world recession.
Mercedes, come back into this. Last word to you.
Sure. I mean, but are we really going to roll out the red carpet to the Chinese government? We keep having these economic summits, meeting after meeting after meeting, and yet the Chinese continue to ignore the U.S. interests in any way. At the end, the ones who are suffering are those investors, those mom and pops out there who have put their money into the stock market. We're seeing obviously right now anxiety in our markets, and I have to say it does have to deal a lot with the Chinese economic slowdown and the state government's control of creating more corporate debt in their country. And I just think at the end it's poor for America, and we have to put some pressure on the Chinese government to change its ways.
All right.
Then get a
debate
better
will
president.
continue. Craig, Mercedes,
Then get
thank
a
you very
better
much, both of you.
president.
We're not finished with this debate. It's going to continue, believe me. Craig, thanks very much, and Mercedes. To Ashley Webster at the New York Stock Exchange. And look at that, down 204 points. All right, Ashley, what took the wind out of today's rally? Go.
Well, that's a good question, Stuart. We were up about 300 points earlier today. We were hoping to be up by 600. That's what the futures were telling us before it all got underway on Wall Street today, but there was never that kind of conviction. Still plenty of concerns about what's going on in China and whether they really know, the Chinese leadership that is, whether they know how to get their economy back on track. And of course, being such a huge world economy, the China problem will ripple around the world. That is the fear, and that is the fear that has seen our stocks go from up 300 to down 200 at the closing bell, Stuart. And I know you and I followed the action on the market earlier this morning. We wondered why there wasn't more exuberance, why the markets weren't moving higher. Well, investors still are very cautious about what's going on in China. And as we saw, as we went towards the closing bell today, they got nervous and decided to sell.
Well said, Ashley. Who would have thought we were up 440 points, then we were down 204 at the close. That's a 600-odd point drop. Got it. Guess who the president just called crazies? These people slamming America over there? No. The opponents of his Iran deal here. Republican Senator Tim Scott reacts. And later, if Donald Trump refuses to take a pledge against a third-party run, are states coming up with a new way to force him to make that pledge? We have details.